When you're searching for car insurance, there are plenty of factors that determine the price you'll pay, from the type of car you drive to your age and your location. But what about your car mileage? In this video, we'll look at what car mileage is, how it can affect insurance, tips on reducing car mileage, and other factors that may impact insurance costs. So, what is car mileage? Car mileage refers to the total distance a car has travelled since it was first used. Typically, this is measured in miles. You'll often find this number on the car's odometer. For car insurance, mileage can refer to either the car's current mileage or the projected annual mileage. This is the total distance that the car is expected to travel within the year. Insurance companies consider both numbers because they give insight into how much the car is on the road, which can help determine the likelihood of it being involved in an accident. For many car insurance providers, high mileage can be seen as a risk factor. This is because the more miles driven, the higher the chance of an accident or mechanical failure, both of which impact the cost of a car's insurance. Low mileage drivers may qualify for discounts for low mileage insurance that reduces the costs as they are less of a risk to the insurer. Is the price of car insurance affected by mileage? Yes. The price of car insurance is influenced by car mileage. Car insurance providers generally consider both annual mileage and total mileage in their risk assessment, as they are key indicators of the likelihood of making a claim. Let's break down how mileage affects car insurance policies across several factors. The first being mileage brackets and insurance costs. Many insurers categorize drivers based on mileage brackets, such as 0 to 5,000 miles, 5,001 to 10,000 miles, and so on. Drivers in the lowest mileage brackets typically pay less for insurance than those who cover more miles annually. Lower mileage suggests that the car is on the road less frequently. This reduces the risk of accidents, theft, and other incidents. This is why insurers often offer lower premiums for drivers in lower mileage brackets. The next is the risk of accidents and claims. The more time the car spends on the road, the higher the risk of being involved in an accident. Insurance companies consider this increased risk when setting premiums, meaning higher mileage can potentially lead to a more expensive insurance policy. Next is wear and tear and depreciation. Higher mileage also correlates with a faster depreciation of the car's value due to wear and tear. As vehicles age and accumulate miles, they are more likely to encounter mechanical problems that lead to claims. Insurance providers take this depreciation into account since it affects both the value and the car's likelihood of claims. The next is annual mileage reporting. Some insurers may ask you for an estimate of your annual mileage during the quote process, or even offer policies tailored to specific mileage amounts. It's important to provide an accurate estimate, as underestimating can lead to denied claims or rate increases if you exceed your stated mileage significantly. And finally, low mileage discounts. Some insurers offer low mileage discounts or pay-as-you-go policies. These can help drivers who don't use their car frequently to help them to save money. If you are able to limit your mileage, these policies could be a cost-effective solution to keep your car insurance premiums low. So, what can be done to reduce car mileage? Well, you could carpool or use public transportation. Carpooling with friends, family, or colleagues can significantly reduce the miles you put on your car. Public transportation is also a great option if available, cutting down on both mileage and commuting costs. The next is working from home if possible. For those with flexible work arrangements, working from home, even part-time, can reduce annual mileage. This could be particularly beneficial for drivers who previously commuted long distances every day. And finally, combining errands into one trip. Planning your errands and combining multiple stops into one trip can minimize your driving distance. By reducing the number of short, frequent trips, you'll limit your car's mileage, save on fuel, and decrease wear and tear. Are there any other factors that can affect car insurance prices? Yes, car mileage is just one rating factor among many that insurance companies consider when setting the cost of insurance. Some other things to consider are the driver's age and their driving experience, the the type of car you're driving, your driving record, and the level of cover. These can all have an impact on the overall cost of car insurance. In summary, car mileage does affect car insurance costs, and understanding this can help you make informed decisions when purchasing insurance. High mileage drivers tend to face higher premiums due to the increased risk associated with more time on the road, while low mileage drivers may benefit from discounts or specialised plans. By managing your mileage and being aware of other key factors that impact insurance rates, you can work towards finding an insurance policy that fits both your budget and your lifestyle. If you're a learner driver looking for more tips, consider subscribing to Collingwood to see future videos. Thank you for watching and safe driving.